Crypto Hotep here with another investing video. We are in week 85 of the family portfolio and dividends tracker. Thank you guys for watching, tuning in again. Very much appreciate it. And this is the Thanksgiving edition, so we may make this kind of quick here because the news events of the week have obviously been quiet just because of the shorter week. But even with the shorter week, there has been a ton of volatility this week in terms of price and price action for stocks and assets as a whole, like Bitcoin, gold, silver, and all the like, if you will. But before we go any further, none of this is financial advice that we say on these videos. If you're not familiar with these tracking videos, go to my channel, go to week number 1, where I go through my whole methodology and why I'm tracking the investment journey with my family. And you'll see what I mean shortly here. But just to jump in here, guys, the only thing that I would say is for this week, we're going to go back to the Kobesi letter, one of my favorite accounts on Twitter or X, whatever you want to call it. But they broke it down here on something to keep in mind, especially for the investor, right? So it says, we now have number one, Trump saying he will keep stocks at record highs. He legit just said that. He said that after Thanksgiving and said, we will keep the stock market at all-time highs and cause the market hot with a big boost for 401ks. That's significant. Never had a president say those words before. We have 600 billion a year in the Magnificent Seven Cap X. So the Magnificent Seven are the big tech companies: Meta, Netflix, Tesla, I should say, and Nvidia. Those stocks. So 600 billion a year in capex. Fed cutting interest rates into 3% inflation. Again, we're going to bring that We're going to bring that interest rate down, right? So right now I think we're at 3.5, I believe. So we're going to bring that down into 3% very shortly here. Probably get another quarter rate cut in December, maybe a quarter rate cut in January. So that's doable. But again, this is bullish news, right? The lower the interest rates, the higher the asset prices typically will follow, because all that money that's been sitting stagnant in high yield savings accounts and money market funds, those type of things, they're going to be looking to put more risk into their money to get a better return. Okay. Global AI infrastructure spending at least 1 trillion a year. Again, this is huge. You have not only the Googles, the Nvidias, SpaceX, Tesla. Like, not only do you have those, but you have even regular, quote unquote, regular companies just kind of latching on to Chat GPT and OpenAI and AI infrastructure as a whole, and just trying to embed it where they can. This is huge. This is very huge. So just saying, AI, that's the buzzword of the year. But also implementing AI will also boost the overall price of stocks and the overall quote unquote value of stocks as well. So again, when you think about AI is a definite play in the future. I don't think the bubbles burst. It's a total different realm in terms of what AI is versus the dot-com bubble, I feel. Fed ending quantitative tightening in 2 days. So we will get to quantitative easing, meaning that Feds will actually potentially start purchasing equities in December. That's in 2 days. Okay. That's big. US deficit spending at 6% US GDP. Okay. That's also huge. Okay. The more spending, right, the more money that we have to make, right? So the more debt that the US accrues, and we keep accruing debt, that doesn't go out of style, the more money we just simply make out of thin air. And that essentially is good for the investor. Nvidia is larger than all but 5 national stock markets. That's pretty impressive. It caught my eye when Nvidia was larger than Canada. That was something as well. Record corporate buybacks of 1.2 trillion coming in 2026. So what that means is companies are going to be buying back more of their stock, so taking the stock off the market, which will essentially boost the pricing. Trump saying he will completely cut income taxes. He did mention that. Trump did mention that this week. That he would like to abolish or eliminate income taxes because of the tariff revenue. That's huge. And then Trump promising the stimmies, the 2000 stimulus checks in 2026. Where's that 2000 going to go? Who knows, right? Could go into investments, could go back into the economy. People will just be spending money and pumping that money into the economy. Those businesses will do much better than they did this year, I'm pretty sure. This is a lot of momentum, though. And so before we go into week 85, let's go to week 84. Week 84 saw us with a balance of 35.82 and 40 cents with a money weighted rate of return year to date of 13.44%, market gain of $294.35, and dividends earned of $29.15. This week 85, we are boosted, guys. And those simple words, even though it's a short week, I told you a lot of price volatility within the week. Our balance, we've cracked 3,700, guys. We have cracked 3,700, and it is a all-time high for the portfolio. So 3706 and 48 cents, money weighted rate of return of 18.55%. Love to see it. Dividends earned of $29.85, market gain of $418.43. So what's been going on? Again, this is a quiet week, right? So this week, we really didn't do anything. This week, all of this activity was last week with our buys. Again, that was last week was our buy week, if you will. So that's where we had all our buys. We already covered that. We legit had nothing this week. Very boring. Nothing this week in activity. So what's been going on? Again, this is all just price appreciation and just holding assets. And this is what happens. So as always, guys, let's go bottom to top. Let's go to our middle. Our middle is at the bottom. Balance of $484.68. Money weighted rate of return year to date 12.74%. Market gain of $32.56. Dividends earned of $4.12. All time high, right? So all time high here. And we're finally inching up with our middles. So our middle has been slow and steady all year. But towards the end of the year here, we've cracked the double-digit percentage return. I love to see that. Target, even though we're down over 21% in Target, we've actually closed the gap. We were down over 30% in Target. So it's just giving me a little bit more momentum and a little bit more confidence here in Target here. Amazon up over 11%. Costco not worried about being down over 3.5%. Google is a staggering over 100% in Google year to date. Starbucks down over 2%. Actually, we've closed the gate on Starbucks too. Watch Starbucks. We're going to get green in Starbucks and it's going to be off to the races. Tesla up over 29%. And then Sony has been the best, probably one of the best performers in anybody's portfolio this whole year. It's been green the whole year, double-digit percentage as well. It's been surprising for me. I wasn't even. It's been a sleeper. I'll say that. It was a sleeper. So our middle stock's looking good. Over 12%, over 12.5%, and our middle was like in the low nines, tens. Love to see it. Just love to see it. Let's go to my wife's. My wife's has regained some ground now. So over 500, so $526.85. Money weighted year to date return of 51.04%. Market gain of $120.04. Dividends earned of $2.43. So when we look at this, we did crack an all-time high for my wife's portfolio as well. Love to see that. Everything is in the green here. Tesla is getting those Celsius returns. Look at Tesla, up over 40.60% on Tesla year to date. Guys, do you remember earlier in the year? If this is your first time watching the video, just go to one of the videos earlier in 2025 and look at the the year-to-date returns at that time on Tesla, they were in the negative 15s, negative 20%. But we just kept buying and just kept holding. Why? Because we believe in the mission with Elon Musk. We believe in his mission for Tesla, and we think Tesla is a very good company. But 40.60%, you can't beat that. Google, up over 100% on Google. And then we did add Microsoft as well. And then Celsius coming in. Celsius has regained its footing. Now we're up above 50% on Celsius. And then even Pepsi, look at Pepsi, almost at 10% on Pepsi. Wife's portfolio is killing the game right now. Okay, let's go to our youngest. Our youngest is up over 20%. Okay, so balance of $534.17. Money weighted rate of return year to date 20.64%. Again, new all-time high right here. Market gain of $62.32. Dividends earned of $2.51. Okay, so Starbucks, again, I'm telling you, our youngest and our middle, watch Starbucks in those two portfolios. When they get to the green, it's game over. So we did make some ground there. Tesla up over 27% in Tesla. Sony up over 37% in Sony. And then Apple. Again, you never bet against Apple. Again, not financial advice, but everybody counted Apple out. They said Apple was lagging behind on AI. They said Apple wouldn't do numbers on their new iPhone. It's funny because I just upgraded my phone from an iPhone 14 to iPhone 17, and they have the most sales in the iPhone 17 model. It's iPhone 17, which includes iPhone 17 Pro and Pro Max. They are surpassing any other handset device that Apple's produced. So again, you never bet against that. You just can't do it. You can't bet against Apple at all. Costco down a little bit less than 1%. Not worried about that. Again, we're never worried about Costco. Costco's going to do what it does. Next, let's go to our oldest. Our oldest still above $1,000. Great to see. Double digits percentage. Money year to date. Money weighted rate of return year to date, I should say. So, balance of 1075 and 2 cents. Money weighted rate of return of 11.36%. Market gain of $86.50. Dividends earned $5.36. Apple over 20%. McDonald's almost cracking 10% year to date. This is impressive. This is impressive. Boring old McDonald's. One of the dividend aristocrat McDonald's here, up almost 10%. I love to see that. Costco down over 2.5, but not really worried. And then Tesla in the double digits, up over 14%. All right. And then like with our oldest, it's again, our oldest is it's great to see though, because everybody else has more than 4 stocks. Our oldest has maintained 4 since the beginning of these videos. We haven't really adjusted anything for our oldest. We've kept it very simplistic, and you can see you can still make money in the markets if you invest in good quality companies. That's a key word, and ones that you have very good conviction in, and that you have a strong stomach, because this market does go up and down. Last but not least, let's go to mine. My balance is $1,085.76. Money weighted rate of return year to date of 17.35%. That is really good. I like that a lot. That did hit a all-time high for my portfolio as well. And dividends earned of $15.43. Very nice. Market gain of $117.01. So technology again. Google and Microsoft, excuse me, big heavyweights, as you can see here. They have been holding that portfolio down, right? So they've been holding the portfolio down on the technology side. It's my biggest percentage allocation right here, and I'm not mad at that. I will ride the dips up and down with technology all day. Finance down over 2% on finance. Industrials and energy down over 2.5%. Pharmaceutical has been picking up, and pharmaceutical is AbbVie. So AbbVie has been boosting as of late. So AbbVie has been doing the thing here, and that's what I like to see. And for real estate, again, we're just keeping it simple with O Realty and just collecting those dividends, letting it be the money machine that it is. Consumer staples, we have Lowe's and Costco. Again, I'm my position in Costco is also down, just like everybody else. But Lowe's is up. Lowe's is up. They had really good earnings, so love to see that. And restaurants and food, very simply, we have Coca-Cola and we have Domino's Pizza. Watch out for Domino's Pizza. They're gonna come back. Watch out for Domino's Pizza. They're not going anywhere. And then Coca-Cola, you can't beat Coca-Cola, over 20% year to date on Coca-Cola. That's crazy. But I love to see that. Coca-Cola is it works. It literally, for me, Coca-Cola is like Costco. It's a very stable company, been around decades upon decades upon decades, and just gets the job done. Is it cool, and is it gonna make you a ton of money overnight? No, it's not gonna do that, but it will build wealth. It will build wealth over time, and that's what we're trying to do here. So overall, very impressed with my portfolio. Actually, 17.35%. You can't really beat that. We'll do a quick benchmark here. We'll just go to Let's just go to good old SPY. Let's see what SPY is doing right now. So 17.37%. So yeah, real close to SPY here. Bigger dividend yield though, so not too shabby here. Always want to see how we're doing in relation to the S&P 500. But yeah, guys, we're going to cut this short. So week 85 saw us with a balance of over $3,700. Another milestone hit, all-time high for the family portfolio. Year to date is 18.55% money weighted rate of return. Dividends $29.85. Mark gain of $418.43. If this video helped you guys stay consistent with your investing, or maybe you want to see some more, or maybe you want me to do a deep dive into something else, let me know. Comment on the video, share the video, do whatever you can. It helps the channel out, helps us out, and I just really appreciate it. But as always, guys, thank you and happy investing.